Good morning, good evening, good afternoon, everybody. Welcome to the Finance Rebel Show. I'm Kamara Ellis, and today we're going to do something, well, it's not different. It's almost what I do every day, right? So today we're going to be talking about stock. We're going to be talking about Apple stock to be precise. I got a lot of phone calls, a couple of text messages, a lot of DMs asking me what's up with Apple's 4-for-1 stock split. Many people are confused. A lot of y'all trying to figure out how to get to the money, and I'm not mad at that. But yeah, let's break it down a little bit, right? So yesterday, Apple had their third quarter call, right? So every company has 4 quarters, right? They report for each 4 quarters. They're not all the same though. So you figure like the first quarter is January through March, and then the second quarter is March through June. However, Apple is reporting their third quarter, right? And we just entered into the third quarter, but their third quarter was last quarter. So that can be confusing for some people. Just know everybody's, let's say, accounting calendar is a little different because you have calendar year accounting. This is every company, every business. We have calendar year accounting, which is January to December. And then you have fiscal year accounting. And fiscal year accounting is whenever you kind of select. It's a 12-month period though. So it's usually, let's say, Apple's is probably, let's say March to March instead of January through December. So that confuses a lot of people sometimes. So I just wanted to give a little bit of clarity around that. But listen, Apple made a boatload of money, as they always do every quarter. I mean, Warren Buffett said Apple is probably the best run company in the world. And I would probably have to agree with him, or at least in large part agree with him. But I want to just run through the numbers real quick. All right. So Apple made $59 billion, $59.6 billion in the third quarter. All right. It's a lot of money. Like, this is not chump change that we're talking about. And so for everybody that's watching, I'm actually sharing the financials on the screen right now. Let's see if I can make that a little bit bigger. And for those who are listening in later on, just kind of follow along. But again, Apple made $59.6 billion in the third quarter. Most of their sales derive from the United States. Coming in second is Europe. All right, so 27 billion derived from the Americas, which is Canada, right? Canada is part of America for everybody. The United States of America, Mexico, and then Central and South America as well. Next was Europe. Europe came in at 14 billion. That's a lot of money, y'all. Greater China at 9.3 billion. And then Japan at 4.9 billion, right? A large majority of their sales come from where? iPhones. So iPhones generated $26.4 billion. Macs contributed 7 billion. iPad 6.5. Wearables like the Apple Watch was 6.4 billion. And services, right? So services are contracts when they usually go into corporate facilities and do work. That came at 13.156. So $13 billion. It's a lot of money. As always, I always like to talk about the cash on hand of a company. So Apple right now has $33.3 billion on hand. To add to that, they have another $59.6 billion on hand in marketable securities. Now, what are marketable securities? Marketable securities are stocks, bonds, convertible paper, things like that. But those are things that are easily liquidated, so they're almost like cash. So when you add it all up, Apple has almost $90 billion in cash. Almost, right? So that ain't a little bit of scratch. That's a lot of chicken right there. And just for the record, right? So Apple has a total of $317 billion in assets. Total liabilities are 245 billion. So if anybody ever thinks about net worth, net worth, clearly they have a positive net worth. Apple brings in a lot of money, y'all. Apple. So that's, I just wanted to review the numbers real quick. Now, one of the things I want y'all to think about is, as like I said earlier, Warren Buffett considers them to be the best run company in the world. Why? Why does he consider Apple one of the best run companies in the world? Well, I would say this. Warren Buffett is big on value investing. And in that whole value investing, he likes to talk about moats. And what's a moat? It's kind of remember Dungeons and Dragons, King Arthur's round table with Sir Lancelot and the dragons and Merlin, and they're all flying around. Well, the moat usually would have the alligators, the lizards, the snakes. So if any troops tried to invade that castle where they were at, they got some protection there as well. And so Warren Buffett likes to talk about that in comparison to stocks or to businesses, right? Because when we're buying stocks for the long haul, we're actually buying pieces of businesses. So when you think of that, right, you want to think about what makes that company set apart, what makes that company special. Well, a lot of things make Apple special, right? They have great marketing, they have great branding, they have great customer service, which we've seen at many of their retail stores, right? And again, and they've been doing it for such a long time. They've got a great, great, great track record. So, how many other companies have all of those things, right? Great product, great service, great marketing, and all that. Not too many. So that's one of the things that makes Apple such a great company. All right, so I wanted to talk a little more about the stock split because that's what everybody has been hitting me up about. So I figured I would do that real quick, talk about that. Now, y'all know I'm serious about my supporting Black-owned businesses. So I want to read my homegirl's blog. My partner over at the Black Wealth Project, the Ivy Investor, who is Courtney Richardson. And so Courtney did a wonderful job doing a write-up about the stock split. Because again, everybody likes to run to these things when they come up. And as you saw today, Apple stock ran up by almost $40 a day. I want to say it closed at 346-ish. Let me pull that up real quick. Pull the stock price up before I get to the coordinates. All right. So Apple's stock today closed at 425. It ran up $40.28. So 425 ran up $40.28, up 10.47% just today alone. So just on the news of that, it ran up 10% in a day. And we're talking a $380 stock, y'all. That ain't no chicken change. That ain't no chicken scratch, excuse me. So, a lot of people are gunning for this. A lot of people are excited about this. So again, it's going to be really interesting how all this comes together. Now I'm trying to find this article I just literally had it up. But now I can't find it. That just goes to show how organized I am. So let's start from the top. So give me 1 second, folks. So like I was saying, Courtney did a wonderful write-up. I wanted to give her a shout out on this. She makes some great points, some really, really great points about this split. And there's some things that I want you all to know. So it's no need in me in duplicating efforts. I might as well just get it right from the horse's mouth. Might as well get it directly from Courtney. I don't know why I did that. And here we go. All right. So Apple has divided its share by 4, right? Her article talks about 3 things investors need to know. So again, listen, if anybody is watching that knows Courtney, do me a favor, tag Courtney in this post. I told her I was going to talk about it. I was trying to get it wrong, but the timing didn't work out. All right, so point number one. Point number one is a stock split only decreases the price per share, not the value of your investment. So for example, let's say you have $100 invested into Apple stocks right now. Forget about the share price. And we're going to divide that by 4. So when the share price goes through on August 31st, your shares will then be worth $100, right? And let's say you have 4 shares, right? No, I'm sorry. And let's say you have 1 share. You'll then have 4 shares. You'll get 3 additional shares after they do this, right? So mind you, the CEO of the company does not make this decision. The management alone does not make this decision. The board of the directors makes this decision. All right. The board of directors actually are the ones that are guiding and directing a company. It's not just the CEO. I know everybody talks about the CEO. I know everybody praises CEOs and they get all the celebrity star power. But actually, the biggest, strongest person in any corporation, publicly traded corporation, is the chairperson or the chairman or chairwoman of that company, which heads up the board. The CEO works at the behest of the board. All right, just so y'all understand that from a hierarchical standpoint. All right, but listen, again, point 1, a stock price only decreases the price per share. So again, with the example that I gave, let's say you had 1 share of Apple, it was worth $100. All right. That share, they split 4 for 1, it will be now worth $25. Or you could say, if the stock's worth $400, right? That's more like it. That's more realistic. You could then say the stock price after the split occurs will be then $100. All right. So point number 2. Her point number 2 was don't be a victim of the corporate action twilight. So with that being said, she made a really good point. A lot of people will try to wait to buy the stock, right, until the very last day. So the very last day you can buy the stock on is August 24th. Now, your stock has to be bought and settled by August 24th. That means the whole transaction. So the day you buy the stock, you own it. Things start accruing, but for this transaction, you won't get the benefit of the split unless you own fully by the 24th. And usually if you buy stock, it takes a couple of days to settle. So a couple of years ago, it was T plus 3. That means your trade day plus 3 more days. Now it's T plus 2. So it's your trade day plus 2 more days. So let's say I bought a stock on Monday. Right, I wouldn't take full settlement, full custody of it until Wednesday. I bought it on Monday. That's the T. That's the trade day. Tuesday, Wednesday. All right. So that's the plus 2. So it still kind of winds up being like 3 days, depending on how you look at it. But that's how they talk about a T plus 2. All right. Now, last point. This is Apple's 5th stock split. They've had several other stock splits. Let's see. I know for a fact I took advantage of one of their stock splits in the past. Actually, the stock split actually helped me keep my son in private school. But the first stock split was December 12th, 1980. And the second was June 6th, 1987. The third was June 21st, 2000. That's when I experienced mine. And the fourth was February 28th, 2005. So this is, again, the 5th stock split. Now, why do they do stock splits? I mean, I posted this yesterday on my LinkedIn. I said they're trying to make the window dressing look pretty. That's why they do it. But the other reason why they do it is, again, they want it to be pretty. They want it to be appealing. They want to attract people into their overall stocks and drive value up even more for their shareholders. So at the end of the day, that's why they do it. At the end of the day, it's a money play because people are price sensitive. So when they see a stock that's $1,000, they're like, oh, I don't want to buy that stock. And then if it's $100, it changes the game. But we know now that stock price doesn't matter. The doors have been opened up. You can still buy through fractional shares. You can still get all of that. You can still take advantage of Apple, even if you don't have the $400 to buy the stock. You can buy stocks with $1, right? You can buy $1 worth of Apple. But some people like it, some people don't. Thank you, Don, for posting that. Definitely appreciate you. So be sure if you are into Apple, again, I don't give out investment recommendations. I'm only here to talk about educational and entertainment things, right? This whole thing is for education and entertainment purposes. So if you like Apple, talk to your investment and tax advisor. I think it'll do well. But listen, past performance is not an indicator of future results. Just because it did well before doesn't mean it's going to continue to do well going forward. So listen, y'all work hard for y'all money. Please do your research. I'm going to really start banging that across y'all heads because a lot of y'all like to follow these janky people out here. They got all kind of financial entanglements. And part of the reason that happens is because people don't do their research. Don't believe me. Go do your own research. Go do your own reading. Don't just lean on my understanding because I've been doing this basically all my life. You have to now also start developing your own understanding as well. So that's all I got for today, folks. Let me know what you think. Is anybody going to buy Apple? Drop a comments below. And I will talk to you all later. Matter of fact, I'm about to jump on the Bada Hood YouTube channel, and we're going to talk stock over there as well. And tomorrow at 11:30, I'll be doing my new weekly review, and I'll be sitting down talking to Tasman Suleiman, who is the CEO of Blackman Hill, and we're going to be talking about social entrepreneurship. So I'll see y'all later. Have a great night. Keep investing and be well. Later, folks.